This is another episode of me trading smart, managing risk while learning how to trade effectively. And today I confused myself a bit, so I did not perform too well, which is totally okay because I'm a beginner and it is only my third week actually live trading ICT concepts. So I don't expect myself to just get it right off the bat. I expect myself to literally fall on my face in the beginning. I expect myself to get it all wrong in the beginning so that I can go back and actually study why am I wrong and become better because of it. So, in the moment, sure, it can be a bit disappointing. It can hurt your ego a bit, but you really have to appreciate the value that your losses bring you. Now, today was not a good session for me. I had the draw on liquidity correct, and the market delivered exactly where I anticipated it to deliver. But pre market, my expectations were just too tight, and that kind of confused me a bit. Then I missed my sell. So, let's get into it. All right, let's go ahead and pull up the trade log. So here's my Notion trade log. If you want this, the link is in my bio. No need to ask me for it. Just click the link in my bio, scroll down a bit, and you will find it. And we can see that I got two trades wrong today. So the first trade was executed at 7:50 during the macro, and then the second trade was also executed in the pre-market session at 8:29. So both of these trades, actually this one was not a short, it was a long. There we go. So one short, one long, and I was a bit confused. So let's take a look at price action. Now, I know my charts are a bit messy. They have to be. I'm learning. I have to develop an awareness for these levels and how prices are respecting them. But starting on the weekly time frame, this week, my bias is bearish simply because of how we reacted to this inefficiency. Notice how we trade up into the upper quadrant of it, but we close below it. That is very indicative of weakness. We also run the buy side above this high and this high. So the weekly objective coming into this week was this inefficiency below the market price, and you can see that we delivered to it today. So that was good. I got the draw and liquidity correct. Now going down to the daily time frame, and it tells the same story just in a little bit more detail. So not only do we have that weekly inefficiency, we also have the daily SIBI right here. And in this case, we failed to trade to consequent encroachment, and we closed below that as well. So what does that indicate? Weakness after clearing out the buy side liquidity here and here and even here. If you go down to a lower time frame, you'll see that this is a pool of buy side liquidity. So we close below the daily sell side imbalance, buy side inefficiency. If you drop your quadrants on this wick, you can see that we perfectly rejected the lower quadrant. So what does that indicate? Weakness. We have a down close candle. This is now a bearish order block. It's that highest up close candle that trades into the premium array. So if we extend the open price of this out in time, we can see that both moves digging up into that up close candle failed. And now finally we have expansion lower, the market rolls down into it. So what it looks like we're seeing, I'm gonna remove this, that's a bit noisy. Remove that, that's a bit noisy. But what it looks like we're seeing is a classic sell week where we have a high of the week on Tuesday. Notice how we manipulate the high of Monday. Trade back up into, do we trade into the lower quadrant of that weekly imbalance? Almost do, we almost do. We almost trade up into the weekly inefficiency, and then we have a large expansion move lower today. So I was not expecting, let me just get this on here. There we go. I'm not expecting the previous week high to be traded to because it rests above mean threshold of this order block. And how we want to see mean threshold of an order block behave is we don't even want to see it traded to at all. That's the ideal scenario. That indicates heaviness. But if it does trade up to it, we want to see it act like boom, react right off of it and immediately trade lower. So I'm not anticipating a draw to the previous week high. I want to see expansion lower, digging up into this up close candle. And looks like we have a classic sell week forming. So there's some higher time frame narrative established. Now, if we look at yesterday's range, I was looking for lower prices, anticipating a move down into here as well, right? But how this sets up is kind of beautiful if you think about it. Notice how we leave all these clean highs. This is yesterday's price action. So that them leaving all these smooth clean highs was kind of problematic and had me not really problematic, but had me thinking they'll probably send it up there to use that buy side liquidity before we see this kind of move, right? And that's exactly what happens. We also tap into an order block on the 4-hour time frame. Go to the 4-hour. We have an order block on the 4-hour, right? Dig up into that in the overnight session, the Asia Asia session, and then we start to see some displacement lower. Here we got our 4-hour change in the state delivery, and boom, large expansion move lower. So them leaving all these clean highs was kind of a clear indication that, they might have to send it up there one more time to run all these buy stops, utilize that pool of buy side liquidity to be the counterparty to those buy stops and sell to willing buyers at a higher price. And then we will reach for a draw on liquidity, right? So because we didn't deliver to it yesterday, we left all these clean highs. That's a good indication that they're probably going to use that. And if you look on the 1-hour, this is literally my bread and butter entry model on the 1-hour time frame. Look at this. We have a bearish breaker, right? We have a high, a low, a higher high, and a lower low. And what I like to look for or use as an entry mechanism is that first inversion fair value gap that you come across in the price leg that has a stop run. So you can see we clear out this high and this high. We clear out relative equal highs. We have a breaker formation. Here is that first inefficiency that you see, right? The first inversion fair value gap. Extend that out in time. And look at that. Let's drop consequent encroachment on that. So you notice how we trade up to consequent encroachment. We barely tap into the upper quadrant, and then boom, large downward candle. This is in the Asia session. We revisit it today. We put in that lower high, wick off the very low end of it, and close below. So that is the algorithmic signature indicating weakness on the higher time frame. And this is when the smart money reversal occurred at 7 o'clock in the pre-market session, which kind of made me confused. So I'll go into that, cover that now. Let's go to the 15 minute. Okay. Just go ahead and drop the executions on the chart. Actually, no, this is a 15 minute, too much of a hard time frame. Okay. Now, in today's session, I came to the charts. I spot this original consolidation. Okay. Now, clearly, this is the start of a market make or sell model, because if you notice how we just trade higher, we leave all of these clean lows intact. And this is during the London session. We leave all these clean lows intact. We have relative equal lows, and we're in a buy program. We're just pricing higher. If we drop down to a lower time frame, we can see that all the way up. Look at all the relative equal lows that we leave on the way up. So here's those lows on the 15-minute time frame. You can see them on the 1 minute in greater detail, relatively equal. And notice all of these clean lows, undisturbed, untouched, just waiting to be destroyed, right? And you can even draw a trend line here. That's a retail idea that I'm looking to fade. So trading smart money concepts, we do what is diametrically opposed to retail ideas. So if we can draw a trend line, we know that retail is getting long off of that, and we can look to fade that. Okay. Now here's where we trade up into that 1-hour inversion fair value gap. Now, admittedly, I did not have this on my charts at the time. I forgot to do my analysis on the 1-hour and the 4-hour today, so that may have been a bit problematic for my trading today. But maybe if I spotted that inversion fair value gap, then I would have anticipated a significant high to be put in here. But I didn't think that was going to occur. What I really wanted to see was them run out this pool of buy side liquidity. So this high and this high, these are relative equal highs. So what I really wanted to see was initially the market to trade higher, run the primary buy side liquidity here, then give me a scenario where the market can break down and I can target the weekly objective, right? And at the time we had a premium gap opening, meaning we were trading higher relative to the previous day settlement where we closed yesterday at 4:15 p.m. So I was looking for a high premium gap opening, which would have supported an initial bearish bias, because you have a 70% likelihood that we trade to the midpoint or the consequent encroachment of that opening range gap. And the opening range gap is simply the difference between the previous day settlement and where we open today at 9:30. So you can see that today's opening range gap was very, very small. So it was kind of insignificant and not really relevant at all. Didn't really provide you any information. But I read the start of a market maker sell model. My bias was bearish. I knew what the market was reaching for. I just wanted to see this, but that didn't happen, which showed me a very important lesson today. How You have to frame these scenarios in mind of what you anticipate price action to do, right? You have to have an idea of what you want to see occur in price action, but that doesn't mean that it has to happen. Now, today, my expectations were so rigid in what I anticipated, I really, really wanted to see exactly that occur. And that is what left me fading what was clearly in motion. And I wasn't able to capture this move, even though we clearly had a smart money reversal during the macro. We were respecting that 1 hour inversion fair value gap. We were respecting the 4 hour order block. We ran. This is all occurring inside this large pool of buy side liquidity as well. And we also have start from market maker sell model here, right? But I mean, my expectations were so rigid that I wanted to see this very specific thing happen in price action. So what I wanted to see occur was down here, I wanted to see the market leave this sell side liquidity intact, not take it before 9:30, and I wanted to see us begin trading higher and aim for this first. Now that doesn't make sense because we have a smart money reversal here. And if we have a smart money reversal, that indicates the transition from the buy side of the curve to the sell side of the curve in the market maker sell model. So price is going to continue distributing lower until it reaches its terminus. In this case, the terminus would have been these relative equal lows if we're just looking at this fractal of price action here. But I mean, the higher time frame terminus was obviously that weekly inefficiency. But if we're just focusing on this fractal and price action right here, these relative equal lows are the terminus for this market maker sell model. Now, what I was trying to do was anticipate that the market was just going to stop here and turn around and reach for this before delivering to a terminus. So what I've learned over the past few days, all throughout this week, I've kind of been focusing on market maker models and macros, is it is not valid to fade whatever that current model is doing, whatever's in motion. It's not valid to fade what is in motion until it reaches its terminus. And its terminus is simply going to be a higher time frame point of interest or a key point of liquidity, which in this case was these relative equal lows left in the London session, which was the start of that market maker sell model, right? So it's not going to be valid to fade that move until it delivers there. You can clearly see how we delivered to it. We just left it with a huge imbalance because this thing is in a hurry to reach down into that weekly inefficiency. But if what I wanted to see occurred, what we would have seen was the market trade down into this pool of liquidity and then work for the primary buy side liquidity above here, leave this intact, and then we might see a smart money reversal up here, then trade lower, take that, and aim for the weekly objective. But I mean, it doesn't make sense to anticipate a smart money reversal here and the start of an entirely new move when we have a smart money reversal here, clearly indicating the shift from the buy side of the curve to the sell side of the curve in a market maker sell model. So it's going to continue distributing lower, aiming for sell side liquidity underneath old lows. And you can't fade that move until it gets there, or you're going to get ran over. And that's just something that I've been learning over and over and over again this week. So if I drop down to the lower time frame, now initially I did sell short because it was very clear to me that the market was reaching for this low. So I had two scenarios playing out in my mind, which I think I just framed both, but I'll just quickly touch on them. Like number one, I wanted to see us come shy of this low and then reach for this, then trade lower. Or number two, I wanted to see us deliver to this low, then trade higher, then trade lower. So dropping down to the 1 minute. Here we go. So obviously we have a low resistance liquidity run, right? Notice how we just destroyed that trend line, absolutely destroyed it, but we come just shy of the relative equal lows and we turn away from it. Now what does that indicate? That indicates that the market is priming these lows. Anybody who's long off this low, when the market comes just shy of it, it turns away, they have a sympathetic sigh of relief because they almost got stopped out, but they didn't. And it turns away. It's like, oh, I'm safe. No, you're not. Retail also views this area as a area of support, and they're going to get long off of that when they see these large up close candles. So I attempted a short down here because I'd noticed how we were priming that low. The problem with this trade was very simple. It was just way too deep down into a discount. So I was selling in a discount. Now here's another important lesson that I learned regarding market maker models. Actually, I use this as an inversion fair value gap. So What I've learned recently is that during the macro, what you usually see is a smart money reversal or a shift from one side of the curve to the next in a market maker model. Like, for example, during this macro, we see that, right? We shift from the buy side of the curve to the sell side of the curve. We have a smart money reversal here. You can notice how we're respecting the order block. Once we have a change in the state of delivery, we have a breakaway gap wicking out of that lower quadrant of the 1 hour inversion fair value gap. So we have a smart money reversal here during the macro that indicates the shift from the buy side of the curve to the sell side of the curve. So you usually see this behavior in price action during the macro, but you don't see that if price has not yet delivered to its terminus. You don't see that if price has not yet delivered to its terminus. In this case, this is not the start of an entirely new market maker model. Or, yeah, it's not the start of an entirely new market maker model. This is simply a retracement on the higher time frame that is a market maker sell model. So this is something that Zeusy said in one of his YouTube videos or in a podcast or something. I heard it. Now I actually see it. So retracements on the higher time frame are going to be a market maker model on the lower time frame. So in this case, we have a market maker sell model. In this case, that's not the day. Here it is. In this case, we have a market maker sell model on the higher time frame, right? And the market is clearly reaching for at least minimum threshold objective, these relative equal lows. Now it's going to continue pricing lower and lower until it reaches this area of liquidity at least, right? That's our low. We could call that a low threshold objective. And until it gets there, retracements that we see are a market maker sell model on the lower time frame. So what I saw on the 1 minute was a market maker sell model, but I thought it was the shift from the sell side of the curve to the buy side of the curve. And that is why I took the market long here. But it wasn't the case. It was simply a retracement on the lower time frame, or a market maker sell model on the lower time frame, which is a retracement on the higher time frame. So if the market does not deliver to its terminus, then what you see on the lower time frame is a market maker model within that higher time frame market maker model. But on the higher time frame, it's just simply a retracement referring to a higher time frame PD array. Like in this case, it's just referring back to this inefficiency in price. We also have this inversion fair value gap here. But if we go to the lower time frame, it's a market maker sell model. But I thought, because of what we saw during the macro, I feel like this is probably just going to go over everybody's head, especially if you're new. But this is just like some more detailed discoveries that I've been making in price action lately. I thought that we were shifting from the sell side of the curve to the buy side of the curve here because of what we see here. We have our original consolidation and then large up close candles, right? So that's why I attempted this long here. I thought we're starting a market maker buy model now. We're shifting from the sell side of the curve to the buy side of the curve. But that is not the case because we have not delivered to this objective down here. Instead, this is a market maker sell model. If you look, we have our original consolidation here. Notice how we form relative equal lows, right? What do we see above the market price? A smart money reversal, and then we go attack those relative equal lows. But what this does is trades up into that higher time frame 15-minute imbalance. And it also trades into, I think, an order block on the 5-minute time frame. Yeah, so it also trades up into an order block on the 5-minute time frame. So that market maker sell model on the lower time frame is simply a retracement on the higher time frame, referring back to a PD array. So in this case, my sentiment got manipulated because that's what macros do. Macros, they come online and we start to see the price spooling in a direction, and that is designed to stir on or manipulate sentiment. In this case, it had me thinking that we're done going lower and now we're going higher. But that's not the case if you simply adhere to the higher time frame order flow and realize that, wait, this thing hasn't delivered to a key area of liquidity yet. So it's going to continue distributing lower until it does so. And you don't even have to know any of this information that I just said right now. If you simply just read the order flow and see that we have an imbalance here, so we could probably reach up into that and then trade lower, and notice how we close below it, right? So what does that indicate? Weakness. But this is just more like an in-depth understanding of it because I'm trying to understand market maker models now, how the market behaves during macros. So we can see that during this macro, this was the start of a market maker sell model, not the start of an entirely new move, because we have not delivered to this pool of liquidity down here. This is simply a retracement on the higher time frame, or the algorithm repricing to higher time frame PD arrays during the macro. So during the macro, we can see the shift from one side of the curve to the next and actually see a smart money reversal and start an entirely new price swing. But if price has not delivered to its terminus yet, then during the macro, what we will see is that lower time frame market maker model, but it's simply a retracement against what is already in motion on the higher time frame, and the algorithm reprices to higher time frame PD arrays during the macro. But it's not the start of an entirely new move because it has not reached its objective yet. It is simply a retracement referring back to higher time frame PD arrays. So that is why I got this trade wrong, because I thought we were going higher based on what I saw down here, which doesn't make sense at all. If I'm just thinking in terms of simple plain logic, look at these relative equal lows we have, right? So wouldn't it make sense for the market to want to attack those after we take this high and we run that? Yeah. And this is also referring back to the 5-minute order block and the 15-minute sell side imbalance, buy side inefficiency that I outlined. So that is why this trade did not work out. And that's why I stopped out here. I got my entry long off the order block right here with this inversion. This not the inversion. With this fair value gap, right? But this is not the start of an entirely new move. This is simply the algorithm repricing to a higher time frame PD array to then continue distributing lower to its objective. And this I was just selling way too far deep down into a discount. If you look like where I'm selling relative to the move, right? But if we take this price leg right here, or we can even do this one from high to low, where's the equilibrium of that? See, I'm trading below equilibrium in a discount. So if you sell short in a discount, you're simply asking for the market to retrace against you and stop you out, because in this, what the algorithm started doing during the macro was repricing and reaching for higher time frame PD arrays, which stopped me out because I sold short way too deep into a discount. Right? This price leg started during the macro, comes online, starts retracing against what is already in motion because it has not yet delivered to its terminus. So it's going to refer back to those higher time frame PD arrays. Then we can continue distributing lower, and this is a market maker sell model on the lower time frame. So I hope that made sense. I hope I explained it well. I feel like it may have went over a lot of people's heads because I don't know, I'm kind of new to this and I'm still figuring things out, but I believe this is why I got it wrong today. It's simply fading what's already in motion before the market delivers to a terminus or a key objective or a key turning point in the market. And then I had a selling opportunity down here because we came just shy of the objective, turned away. News driver came out, trades higher, takes out this short-term high, almost taps the open price of the order block, but still digs up into it. Closes below, large premium wick. Can't even reach consequent encroachment of that. What does that indicate? Weakness. Then we have a change in the state of delivery. We roll over this fair value gap, inversion fair value gap. Now I wanted an entry off the order block because I've been kind of experimenting with order blocks lately, although it never repriced to it, and that's why I missed this sell. But it did, this candle did open up here, trade up into the lower quadrant, and that would have been a good sell right there using the inversion fair value gap. So I've kind of been trying new things. I've been trying using order blocks. I've been trying to figure out these macros and market maker models, just watching price action live. And I think what I'm going to do is kind of go back to what I've been doing this entire time, which is just using inversion fair value gaps and fair value gaps, primarily inversion fair value gaps, and kind of just stick with that and build a model based off that, because that's what I initially did. I feel like I'm kind of going out of my way and experimenting with a lot of new things. So I'm not really focused or dialed in on one particular thing. I guess you could say that's kind of a new thing. Not a new thing, a good thing, because I mean, I'm still a beginner. I still got, I got to figure out what works for me and what doesn't. So if I just experiment with a bunch of things, then I'll know what do I not like trading with, what do I like trading with. And in this case, I think today really showed me that I really like inversion fair value gaps, and today also showed me a lesson that is the primary cause for the losing trades that I take is simply fading what is in motion, right? So this is going to continue to be in motion until it delivers to that objective. And look how we opened at 9:30. We just ran right out the gate down into that objective. So that was a nice move. Missed my sell here. I was going to sell short in the order block, targeting there. That would have been 70 handles, but it still offered this opportunity off of this for 50 handles. So I would have been boom, boom, done. And that would have been like a 4-minute trade. But it's okay because there's going to be more opportunity tomorrow. I don't care. I ain't got FOMO because I know that setup's going to be there tomorrow and the following day and the following day and the following day. And that's it. See ya.